Hey, welcome into the Bitcoin Mindset Podcast. I'm your host, Cris Reed. I'm here with Chase Palmieri. Chase, thanks for jumping on, man. I really appreciate it.
My pleasure. Thanks for having me.
Yeah, absolutely. I'm loving the fact you come on the show because we are all living in this transition period between kind of like the fiat world and the Bitcoin world. And I love having people on talking about what they're building, kind of what their mindset is as over the last several years and kind of what's brought them through their Bitcoin journey. And a lot of people building a lot of really cool things kind of on this quasi bridge between those two financial systems. And it's something a lot of us think a lot about day in and day out. So I'm glad to have you on the podcast. So we'll start here. Can you give just a little bit about your Bitcoin story, kind of what led you to found Acropolis and then now being the COO at Sovana?
Yeah, so I guess I'll take it back briefly to finding Bitcoin. So I kind of first heard about Bitcoin 2015 ish, in how it related to what Julian Assange was doing at WikiLeaks, and then how Edward Snowden kind of learned from that to economically empower what he was trying to do with his whistleblowing. I was pretty deep in the world of journalism and media watchdog back then. That's kind of the world that I came from, despite having kind of prior startup experience and getting my degree in business and entrepreneurship. I was trying to apply kind of my business and entrepreneurial stuff to trying to write the media world and some of the kind of misaligned incentives that we see having unfortunately captured and dragged down the credibility of journalism today. And so that was my focus for about 10 years out of college on a company called Credder, where we built the Rotten Tomatoes for news. So we're letting people rate online articles and outlets and authors, and then licensing these scores out to advertisers and social media platforms to try to create an incentive for what the public found to be credible, not just what, you know, the appointed gatekeepers found credible. But, I happened to find Bitcoin during that time while I was also deep in my studies on accounting, finance, economics, supply and demand. And so as soon as I heard the meme of 21 million, I went down the rabbit hole to try to basically challenge that thesis. Like, is there any way where there will be more than 21 million Bitcoin, or where the network as a whole were to go down? Basically, just really getting into the nitty gritties of the technology and the incentives. I've always been fascinated by incentives. And, once I confirmed that, oh no, this protocol is not going to be taken down. There's no way there's going to be more than 21 million. This is a predictable monetary policy and issuance schedule. It just immediately to me said, oh, this is going to be one of the most valuable assets, investments, store of values, but also, industries in the world. And at the time I was already, years deep into my own company that, like I said, I ran for a total of a decade. Um, but it was finding Bitcoin was quite the distraction to what I was supposed to be working on in the journalism world. I kept finding myself pulled more and more to journalism or from journalism and into Bitcoin. And so, sooner or later, I was like, okay, it's time to try to sell this business because I need to be working full time in Bitcoin. And then speaking of transitions, that's when I tried to make the transition into Bitcoin only. So I reached out to the folks at Early Riders VC, a venture studio and venture backed company that works in Bitcoin only. Famous company under that portfolio is OnRamp, multi-institution Bitcoin custody. I reached out asking if there were any roles available. Little did I expect they were looking for a CEO of a new company that they were hiring for called Acropolis, that was going to be the multi-institution custody platform for corporate entities. So business, treasury, business adoption. So I was brought on to build out that business. I did. We ran that business for about a year and a half. Um, did quite well with that in terms of building up the brand, onboarding AUM from privately and publicly listed entities, and then found Sovana from a video on YouTube that was Sanjay and Vijay Boyapati, author of The Bullish Case for Bitcoin, announcing this new product that I'm sure we're going to get into at Bitcoin 25 in Vegas. And it was like a whole nother rabbit hole. I've gone down the Bitcoin rabbit hole. I've gone down the MSTR rabbit hole. And when I found Sovana, I was like, oh my God, this is fascinating. And so I started working with the team behind the scenes for a couple of months. and it's a very small team. I'm actually hire number one, but I basically just bulldozed my way onto the team, and it was like I'm not taking no for an answer. And so I've recently moved from my role at Acropolis over to chief operating officer at Sovana.
Yeah, just a couple points there, but it's just, living in this world that you go down, like you said, you go down the Bitcoin rabbit hole. And then, in 2020, Michael Saylor and his team did what they did with MSTR in August 2020, and just kind of like turned Wall Street upside down and brought Bitcoin into that world. And then there's like many rabbit holes with the preferreds and STRC and things like that on the Wall Street side. But I've found the last couple of years just like products being built to help even just small businesses or individuals, not just like protect their wealth and grow their wealth. But then also, the way I look at it is, the Nakamoto Institute article back in 2014, Speculative Attack, Pierre Richard, and some of the earlier writings are really starting to like come to fruition after all those years of things that are being developed that allow Bitcoiners to, I wouldn't say the word exploit, but I would say like kind of take advantage or arbitrage between both those systems. And so when I saw Sovana, I saw the presentation at Bitcoin 25, and it just like light bulb went off in my head, and you're looking at, I think it's like 30 trillion plus dollars that's sitting in untapped real estate and all those fiat units, and that's 20 times the market cap of Bitcoin. And so like, once that you start going down that road and start thinking about that, and then how to arbitrage those two systems, because I think in some ways we're all trying to arbitrage the two different systems to maximize value for, yourself, your family, and then for your future. So can you talk a little bit about Savannah and kind of what that mindset is?
Yeah, and just kind of on the arbitrage aspect, there's many different arbitrage opportunities that Bitcoin presents. Obviously, there's what Saylor's doing, but just in terms of lifestyle, working at a Bitcoin only company, if you are a Bitcoiner, I mean, it stops feeling like work. You really start to feel energized every day. That's an arbitrage. I relocated from California, super high tax jurisdiction, to Brazil, where my wife and her family are from. And so just kind of the dollar to AI arbitrage is something that I'm benefiting from on lifestyle basis. So yeah, these arbitrages are out there, and arbitrage is not really a dirty word. It's just kind of identifying an opportunity or something that's mispriced in the market. So, what Savannah is at a very high level is a way for real estate owners who have investment properties, rentals, but residential real estate owners to tap into the idle home equity that currently is sitting trapped in their real estate to make an investment in Bitcoin, but in a way where they put no money into the investment, have no monthly payments, no debt, no interest, no margin call, no liquidation. And that all sounds way too good to be true. But the way that it works is that they are putting their real estate property, again, non primaries, only secondary properties, as collateral against a capital partner that Savannah brings to the table that is getting principal protected Bitcoin investment. And then those two sides share in the upside. So the capital partner gets principal protected Bitcoin exposure because the principal is being secured by the real estate owner's collateral. We record a lien on their real estate, and the real estate owner is getting a share of that upside in the Bitcoin investment without putting any money in, just simply basically saying, "Hey, I'm willing to accept the full loss scenario over this 5-year term."
And I did hear this, even some minor changes too, because initially there was a 10-year term, is that correct? And then that changed to 5.
Yeah, so what Savannah's doing is making a market. And so the 10-year term is obviously beneficial to the real estate owner side, but that requires an up to 10-year lockup from the capital partner side. And so what we've found is a sweet spot at 5 years where the real estate owner feels, especially if they're all Bitcoiners, they know that over a 5-year period, Bitcoin is historically up. So a 5-year term feels safe for the real estate owner, and 5-year lockup for the capital partners is manageable. It's stomachable.
And then, what are some of the conversations that have been going on? And what are some of the questions that are being asked? Because I think kind of like you mentioned, like it kind of sounds too good to be true. And what's so funny and interesting is these Bitcoin laced instruments across different verticals. That's like the first thing you hear from people. It's like, oh, it's too good to be true. Like if you're in the debt world and on Wall Street and those types of instruments, and you hear 11%, like immediately it's got to be a scam. Anything above 7 or 8. So it's funny how whatever vertical it's in, it's something that's Bitcoin laced, and that's this concept of I think it's built on this Bitcoin ARR of 30% a year. Like if that's kind of like the hurdle, and that creates those opportunities, when it's kind of paired with other assets. So is there, any main questions that have come up, people that you've talked to with the product?
Yeah, so Bitcoin is too good and true, I would say. But what's interesting about this is that you actually don't need it to be Bitcoin. This is not something like STRC where you need it to be Bitcoin with the high compound annual growth rate into the future to power the dividend. The way that this works is we create a joint venture where the capital partner is in the joint venture and the real estate owner is in the joint venture. The real estate owner is adding or contributing to that joint venture a lien on their property that is equal to the capital that is being contributed to from the capital partner. And so technically what we do, and OG Bitcoiners might not love this, but this is what we've are starting with. We'll eventually get to using spot Bitcoin, but right now we buy the BlackRock IBIT ETF and we custody it in a Charles Schwab account on behalf of each of these joint ventures, which is on a property by property basis. And so technically we could buy any stock. Technically we could secure the principal with other assets besides real estate. But, there's a lot of capital that is comfortable with real estate as the collateral. And there's obviously a lot of real estate owners out there who are becoming orange pilled and wishing that they could use some of that equity in their real estate to get more Bitcoin exposure. And so those are the vehicles that we're using. But this does not fall apart if, for example, and we are doing this, we have some of these deals that we're matching on MSTR, some of them that we're matching at 70-30 splits in favor of capital partners, some at 60-40. So we have various levers that we can work with. And it's not the case where we have to have an assumed 30% compound annual growth rate. As long as the investment that is in that joint venture is flat or goes up, there is no downside to the real estate owner. We will rip up the lien and either, they walk away with nothing in the case where the investment was flat for 5 years, or in the case where it's up, we write a check to the capital partner and a check to the real estate owner and then rip up the lien. So the only downside to the real estate owner here is if whatever is chosen to be invested in that joint venture, which in the early days is going to be IBIT or MSTR for us. Uh, the only downside is if at no point over the 5-year term is that investment up, because the real estate owner can end the position early at any time with no penalty. So they don't have to wait for 5 years. They don't have to time it to the day. If at any point the investment is up, the real estate owner can end the position, settle, get paid out, and start a new position, or walk away and choose to do something else like a HELOC on their property. And just to maybe add to that, a HELOC or taking out, like refinancing your property and paying a monthly interest expense, which is you could think of as the alternative to what Sovana is offering. Well, that comes with a debt service that many folks don't want to take on, maybe because they don't want the cash flow or whatever it is. But technically, if you were to refinance your property and take on the debt expense, that allows you to have 100% of the Bitcoin upside. And if Bitcoin really grossly outperforms, it is a cheaper on net solution to just refinance your property. But Savannah is offering a solution to real estate owners who don't want to take on a debt service to get Bitcoin exposure with no money in.
And then so you're participating on the upside with a partner basically, and then like you said, you can pull the trigger when you want for a timing mechanism that's kind of built in, like a self timing within that 5 years. If you do like say for example there was $100,000 gain kind of in that relationship, and then you would say, hey, I would like to take, I'm ready to get out. So there would be a check cut for 50,000 to the user. It's a 50-50 split to the upside, correct?
That's exactly right. So the capital partner has to be ready to accept a maximum 5-year lockup, but the real estate owner can start a position, Bitcoin goes up 30%, they can end the position the next day and take their, 15% of that 30% appreciation.
Are you able to share how many users are currently using the product, or any kind of metrics in that regards? And then when did you all first get started?
Yeah, absolutely. So the company launched on stage, like we talked about a year and a half ago. The company existed a year and a half ago, launched on stage about a year ago. Just off of that one announcement alone, which is also where I found Sovana from, they generated over 200 million in waitlist demand from the real estate owner side, people uploading their properties and qualifying their properties, listing their mortgage balances, their addresses, et cetera, and qualifying on the wait list. We've just as of 2 weeks ago begun funding third party customers. So we've done test transactions with our own team's properties and our own team's capital to go end to end, every car, all the way through the car wash, if you will, through the closing process. But it's only as of 2 weeks ago that we've begun funding folks off the wait list. So we have only one live deal because the next 12 deals are going live in the next 2 weeks. And the reason for that is that it hasn't been challenging to find the real estate owner side of the trade. You're kind of, I can tell that you kind of find it interesting, and most people we talk to that are in Bitcoin see it as kind of red meat. It's the capital partners where we have to find the bit of a sweet spot, and that's been our focus over the last kind of 6 months or so. Because if they love Bitcoin too much, they don't see the downside protection as valuable and they want the 100% exposure. And if they don't like Bitcoin at all, well, then they're just going to keep doing whatever their normal real estate credit deals are where they're earning interest. And we're trying to convince them to, instead of taking interest, take Bitcoin upside. So it's kind of this sweet spot of family office or high net worth investor that we have to get to until we reach scale, which we've identified real estate credit partners that are willing to fund on a programmatic basis once we've reached about 15 million in portfolio.
Yeah, because that was the word scale I was thinking of. So it seems like you got to have to find that hybrid, the hybrid entity or that hybrid partner to be with you all to kind of participate with this. Is that right?
Yeah, so we're finding like we have folks on the team with strong real estate backgrounds, and they have a lot of contacts in the space that have told us, "Hey, we just need to see 15 million in positions funded, and then we will create basically a warehouse line with you, and you can go ahead and do these deals at scale with our capital." So we're just trying to get from the here to the there, and to do that, we're doing everything from funding positions off our own balance sheet, working with high net worth individuals, family offices, tweaking the deal structures where, if we can get a deal closed at 70% upside and 30% upside for the real estate owner, and the real estate owner will take that, we'll fund that position today. We're doing some at 60/40. So we're really just trying to make that market on the first 15 million or so, and then we unlock scale.
And then moving forward, I guess maybe the next 1 or 2 years, kind of what is the vision for the company? I mean, I totally get the concept of taking an asset and kind of capturing that spread between the equity that you've grown in your home. You've been in a home for 10 years and you've got maybe 300, 500, 800,000 equity. Now the numbers, that spread makes total sense kind of on the product user side. But for the company, how do you see things potentially changing over the next year or two? Kind of what are you guys looking for as far as like your all's vision?
So the vision is to get to the 50-50 split as quickly as possible because that seems to be where we have the most scale. So that is the split. If we can find capital partners that are willing to take a longer lockup period, we could maybe eventually tick closer to that 10-year term. But again, it really is going to be reliant on the capital partners wanting to be in the trade for that long. And as Bitcoin institutionalizes and more folks are, comfortable with it, we see it ticking up that way. So the goal is to do at scale 50-50 splits, ideally more than 5-year terms. And then we can do a lot of really interesting things once the positions are up. So, for example, if a real estate owner enters the trade, the position is up, we could, create a line of credit against the value of that position. That's one thing we can do. Since we're already custodying the Bitcoin and we aim to get to actually using spot Bitcoin in the very near future, we could introduce custody on that. So, for example, hey, you ended your position. we're already holding the custody of this Bitcoin. Would you like us to remain a custodian on your behalf? So there are other businesses. Those are just two really easy examples that come to mind. But there are other financial products and businesses we can layer on top of this. But at the end of the day, Sovana wants to sit at the intersection of the real estate market, which, as you mentioned, it's 35 trillion in total residential US home equity right now, and the only 1.5 trillion of Bitcoin. And we want to create that pipe in the same way that STRC is trying to create the pipe from fixed income, bond capital into the Bitcoin network and create, the most frictionless experience for the capital to flow through them and into Bitcoin. We want to sit at the intersection of real estate and Bitcoin and create the financial products that are as easy as possible. And basically the thesis of the company is how much of that real estate value, that 35 trillion, would convert itself into Bitcoin today if it was really as easy as that.
And do you see it eventually? Because it's so funny how this works. Is typically Bitcoiners are at the forefront of tech, and just having conviction in these things early. A lot of these products, and then what I've seen in the past is that it kind of gets to the normies and kind of mainstream as the product matures over time, and then as it's been used and everything else, and it gets a track record. So I would assume, initially the first tranche of users are going to be a lot of Bitcoiners, but I could see this potentially, replacing the idea of a HELOC. If you've never been through a HELOC, it's a lot of paperwork. It's a lot of things you got to read. There's so many covenants with it. Is it interest only? Is it 15-year or 30? So there's just a lot of red tape. And then, have a history in traditional finance myself. And there's a lot of red tape in the entire industry in a lot of different ways. So I kind of see this kind of stripping down a lot of that and making it more just easier to understand and then participate with Bitcoin along the way. So is that a good way to look at it?
It is a good way to look at it. And because we aren't relying on monthly payments from the real estate owner, we don't have to do a credit check. We don't have to find out about your income stream. We just need to do an appraisal on the property, identify, what the outstanding mortgage is and that there really is enough equity in the property to write the positions lien against. And then we're off and running, matching the capital and buying that Bitcoin, or in this case, IBIT in that Charles Schwab account the next day. So it really is a much lighter process because of the fact that we've designed a product where there is no interest expense, no debt service on behalf of the real estate owner.
And then did you mention secondary? Is it primary and secondary?
It's not primary yet. There's nothing technically stopping us from doing so, except that our capital partners would prefer collateral, real estate collateral that is not being lived in by the other side, because there's all kinds of consumer protection laws if it ever were to come to the case where you have to evict somebody in order to enforce the lien. So for their sake, but also for Sovana's own kind of brand reputation, PR sake, we don't want to be in the business of evicting people if they don't make, if they're down on their positions here. So for that, we're only working with accredited investors using US residential real estate properties that are secondaries.
Makes sense. To me, it just seems like, an extension of a real estate's investor portfolio in a way. It's almost like we would say we wouldn't really say diversifying because we want to get that exposure to Bitcoin, but it's almost like that quasi exposure to Bitcoin if you're a straight real estate investor, and taking some of those secondaries and getting that exposure in that way. So I find that kind of interesting. It's not a security, but it's kind of an interesting wrapper if you're looking at it from like a real estate portfolio.
Yeah, you can almost think of it as adding to your property value, like in the same way that, putting on a new roof would, but this is adding to your property value in a way where you actually put no money in. So there's no expense, it's just upside. But again, just to be very clear, you are accepting the full downside. But our customers on the real estate side put very, very little weight and probability into a scenario where Bitcoin is not up at any point over the next 5 years, especially when you're getting in at these, soft prices today.
That's a good point. Yeah, at a 76K, I think in that window of 5 years is a very interesting because it has a halving built in at this point. Obviously, like in 2 years there's a halving, and so we push it out 5 years. That's 2031. So that's kind of an interesting. There is somewhat of a timing mechanism. Of course, you're not trying to be a trader with this stuff, but timing definitely helps. For it to be in 76 versus 124 just a few months ago. And if you've been through cycles before, you know that typically when we have a 50% drawdown over the years of the cycles, it's been a good time to accumulate and be smart about their accumulation. So I find it interesting. I
Yeah,
mean, it's just another way that you're able to tap into kind of the traditional markets to be able to get your some type of exposure to Bitcoin, but it's almost like a different wrapper. So it's been really interesting to kind of talk through this.
yeah, and maybe one more thing on that is that what's interesting about this Bitcoin drawback and the fact that our product relies on a collateral mix of both the real estate equity and the Bitcoin is that real estate values are as high as ever, yet Bitcoin has drawn back. So by tapping your real estate equity to get into your Bitcoin position with Savannah now is better now at 80K, 78K, wherever we're at, than it was just a few months ago when we were at all-time highs. And because your home equity can basically buy you twice as much Bitcoin, and if you believe that buying not at the all-time high but at these levels decreases your downside risk over the next 5 years, then all the better.
So they walk me through real quick, kind of the steps. Like someone says this makes sense, it's something they want to participate in. What's kind of like the 3 or 4 step process to get this going for them?
Yeah, so I'll do it from the real estate side. So they would go to Savannah.io. They would fill out their property information. So, address, who are the owners on title, what is the outstanding mortgage. It creates a little calculator for them that shows them, hey, Savannah will fund up to 70% of the total value in the home. So value minus mortgage. We'll fund up to 70% of that with our money, our capital partners' money, really. And then they get to decide how much of that they want to invest and whether or not they want to buy something like IBIT or MSTR. And we give them the option, hey, we're offering the product at 50-50 splits, but we can fund you today at 70-30 and much sooner at 60-40. Are you willing to accept any other split to get your position funded sooner? And so they have that option. Then their property hits the wait list. We're constantly talking to our capital partners. So when we see a nice piece of collateral that, let's say our capital partner is like, I really want MSTR. And if you can get me 60% MSTR with full downside protection, I'll write you a check against it tomorrow. And we're like, okay, boom, here's the property. We talk to the capital partner. Here's the collateral. Here's the jurisdiction. Make sure that they're comfortable with the collateral because ultimately they need to be comfortable with the fact that the principal protection is real. And if the property is in some place they've never heard of, some state that maybe concerns them for various reasons, we will basically move down the list until we find a piece of property, a collateral that they feel good to write the money against. And so that's the process. Then we reach out to the real estate owner. We go through all the steps, including an appraisal, securing title insurance, and then we go ahead and create the joint venture, and we get the capital from the capital provider into the Charles Schwab account, and we buy the Bitcoin, and then we provide view access to both the capital partner and the real estate owner, with Savannah acting as the administrative agent on the account. And obviously, the capital partner has nothing to do over the 5 years, and the real estate owner has really nothing to do either, except let us know when they're ready to settle that position.
And I know this is a tax question, so everybody needs to talk to their CPA, of course. But you participate in the upside. Let's say you make $100,000 net, then the check's cut for 50. How does that work potentially on the back end?
Yeah, good question. So we do liquidate the position and pay out in USD. So we'll write a check in USD. So we incur the capital gain as the joint venture right then and there. So you just get your check, which is basically your part of the appreciation minus the tax. Obviously, the longer you stay in the position, the better for the capital gains. And what we want to get to is the point where we're dealing in spot Bitcoin so that when we settle the position, let's say together they bought 2 Bitcoin, the capital partner and the real estate owner bought 2 Bitcoin in the joint venture. We want to get to the point where we settle and we just send, if it's 50-50, we send this amount of Bitcoin to the capital partner, this amount of spot Bitcoin to the real estate owner, and let them continue holding the Bitcoin and incur a capital gain on their own terms if and when they want to in the future.
And then that would be a step up cost basis once those bitcoins were dispersed. You started. I'm trying to think through that how that would potentially work. Again, people need to talk to their CPA on these things for
Yeah, and
taxes.
we're not doing that yet, so we still need to figure that out. But that is there's some tax benefits for when we get going in that way.
Yes, no, it makes total sense. Well, hey, Chase, this has been great. I really appreciate that. Selfishly, I'm just trying to have people on to talk about these things, these products, because there's a lot coming out. I think there's a lot of opportunity when done responsibly, and you can kind of create these. I wouldn't say the word exotic, but just different types of products in your life to kind of take advantage of opportunities whenever it is kind of Bitcoin laced. So I do appreciate you coming on. How can people get connected with you on socials?
Yeah, absolutely. And thanks for having me. I mean, selfishly, I'll say yes every time you invite me on. So you can find me on Twitter at Chase Palmieri. You can also email me at chase at Sovana.io. That's SOVANA.io. Obviously, the website is Sovana.io. You can find all the information there. And if you want to follow the company on Twitter, it's at Sovana HQ.
Okay, we'll have all the links to Savannah and all the information you guys may need, maybe even a PDF white paper or something that Chase wants to send you to. And then feel free to reach out to Chase for more information about Savannah. Chase, I appreciate you coming on, man.
Thank you, Chris.